For more on the outlook on retail as we head into the holiday season, let's get to former Toys R Us CEO Gerald Storch of Storch Advisors. Jerry, great to see you.
My pleasure.
Seems like a number of challenges facing the retail industry. At the same time, as Guy had mentioned, you don't want to bet necessarily against the U.S. consumer. So where do you come out on how this retail season will be?
Look, of course, there are challenges, but the opportunities are going to way overwhelm the challenges. First of all, there's huge consumer momentum any way you do the numbers. When you take a look at what's going on with retail sales, look at the two-year stack. It's the only way you can do it because last year was during the pandemic. It's up double digits. That momentum is massive. Consumers have the money. They're spending it. The government keeps fueling it. That's going to drive all the way through to the holidays. I have almost no doubt about that. Secondly, some of the negatives or challenges are actually opportunities for many retailers. The stronger retailers don't have any problem when there's some shortages and inflation. They actually do better. They can raise prices, margin. Look at that gross margin number for a lot of these retailers. It goes way up. The consumer comes in the shop and they go, oh, I'm sorry, I don't have what you want, but I have this. And no, it's not on sale. We can't put it on sale. My gosh, we'd sell out in 2 seconds. We don't have enough of it. So retailers are going to do just fine during the holiday season. And finally, there's the better than last year syndrome. Remember last year? Last year was horrible during the holiday season for COVID. It was the biggest, kind of lockdown conditions you can possibly imagine. People are learning more how to live with it for better or worse, and I don't think we're going to see that again. So a much better environment than last year, way up double digits versus 2 years ago. I really see nothing but strength. I said that when the retail report came out for July. Some people said, oh, it's slowing down, it's down. That's only a weird month-over-month calculation. Year over year, it was still up double digits. And what happened? Every retailer, one after another, marched forward and reported amazing sales numbers. Some disappointed a little because they had very high expectations, but they were all way up, and we're going to see that for the rest of the year.
Hey, Jerry, so prior to the pandemic, I think on a show like ours, we might have been talking about a lot of these department stores and just kind of kissing them goodbye and just saying that their time had come and gone. And when you look, let's say, like a Macy's, it's up 100% of the year, up 300% from its pandemic lows. Were the stocks bailed out or were the business models bailed out or both? How do you think about some of these department stores going forward?
Well, you know that phrase, dead cat bounce. I've seen nothing that suggests that traditional department stores have reversed their long-term strategic decline. Of every segment in retailing, their two-year stack that I've been talking, that's the worst. It's by far the worst. Nordstrom couldn't even, with all the pent-up demand, they couldn't do better the last quarter than they did 2 years ago. Macy's did a little better, but it's still much worse, much weaker than a Target, a Walmart, a Costco. Amazon, we don't even talk about Amazon. My gosh, they're still the class of the e-commerce business. Then you have Dick's and Best Buy. You have much better places to go. Those are great places to go because why? They're consistent with where the consumer is going, towards sporting goods, towards electronics. And of course, the home people like Home Depot and Lowe's, that's just going to keep going. That's where the consumer head is right now, not department stores. This is their last chance. If they can't post a positive two-year stack and a good, healthy one this holiday, it's never happening.
Jerry, I also wanted to ask you about who or what type of retailer you think has pricing power. I was speaking to Oliver Chen, the retail analyst over at Cowen last night, and he said that handbags, you could be paying 10 to 20% more on handbags this holiday season. That floored me. I mean, I'm not in the market for a handbag, thankfully, but I mean, I would imagine that would be sticker shock for a lot of people.
Well, luxury's got its own little closet way up here, for people with lots of money. It's been doing great for a long time. They've been raising prices forever. Take a look at what your favorite Birkin costs now compared to what it cost 10 years ago or 20 years ago. So they keep raising prices, and there seems to be people who have the money to spend it, particularly in the stock market. So I certainly think luxury's going to do great. When I talk about department stores, I'm talking about traditional department stores, not luxury. Luxury is thriving and will continue to thrive when you have a stock market. The number one R-squared, number one correlate with luxury sales is stock market appreciation. So how could it not be strong?
Yeah, we're at record highs. Jerry, good to see you. Thank you. Jerry Storch. Karen, I wanted to get to you on the back of that last bit of our conversation. Could the Real be a winner this holiday season?
I hope so. It hasn't been a winner so far. That's been a lump of coal for sure. But I think that they're positioned well. I do think the circular economy is absolutely gaining a lot of traction. So they do have goods. They don't need to manufacture goods. And I'm optimistic as he's talking about luxury and handbags. that plays very much into RealReal's strength. So I'm hoping for a very good fourth quarter. I think they need a fourth quarter, a very good one, to get the stock back on track. And I think they'll get it.
Dan, I want to ask you about Visa. You flagged it earlier today. It's down 2.6%. Pretty much, since its July recent highs, hasn't been doing too well.
Yeah, and I think that might have to do with some of the deals that we've just seen over the last month or so. We saw Square pay $29 billion in their stock for Afterpay. That's a buy now, pay later platform out of Australia. And then just last week, we saw the deal from Amazon with Affirm. Now, I thought that was really interesting. Amazon already has a buy now, pay later. They're looking to kind of get broader distribution for that. And that might kind of speak to a little bit of the fact that, okay, is this a sort of subprime sort of borrower who looking for a point of sale sort of payment sort of thing? So, any way you think about it, I think this is going to be a fascinating space to watch. It's not really fintech the way, we think about technology enabling things. It's really about lending. And what does that do to transactions for Mastercard and Visa? So Mastercard and Visa have rolled over. They're at least 10% off their recent highs. They've not confirmed any new highs in the S&P 500 in a while. Keep an eye on that. And also American Express is down a bit from its recent highs.